I've just completed the con call of KPIT Technology. It's a Q1 FY26 con call. There are a few things that I want to talk about. The first one is the financial. So, companies' revenue increased by in 10 to 11% revenue, and EBIT also improved by around 12 to 17% in both 12% in 11% in the dollar terms, and like 14-17% in the rupee terms. And revenue, basically the after tax profit saw a decline because of the one time income that company recorded in their books last year. And that's the thing. But yeah, so overall result was around flattish to the slow growth. But the thing is, this is because of the company's business. So companies basically in the auto sector, companies 100% in the auto sector. The company basically focuses on the development of case and SDB. Let me explain case. Case is basically the segment in which we have connectivity, we have connection, autonomous, shared, and electric parts. So basically, it's a futuristic cars, not a futuristic, but the cars with all the softwares that we have. SDV is also stands for that, software defined vehicle, in which we have softwares in the cockpit, e-cockpit of the company, and the ability of the car software to connect with your IoTs like watch or your phone and all. So companies working on that. So what's happening? Let me just give you some brief what's happening in the sector. So in last few years, China is taking over this auto sector companies because of they have cheap first of all cost of production. So what they are doing, they are building e-vehicle and hybrid vehicle with lots of software defined things in the car. So they have normalized the e-cockpit. They have normalized the autonomous tool in which you can park your car, automatically park your car and all. So they have made that thing default, and they just bring that product, that their like cars and all, to the European market. So what's happening in the Europe? Consumer are preferring these EV from China over their legacy player, which is like Volkswagen. We have Porsche. It's not different thing. Yeah, Volkswagen and other EV player there, and the legacy player in the internal combustion engine. So they are like basically losing their share in the IV sector, in the car IV sector. So what's happening? The demand for these companies going down, and overall, if we just talk about the overall EV sector, it's also slowing down because of global uncertainties and these US global uncertainties in the policies and all, tariffs and China and US war, and different things. That's like overall sector in the down, and especially the EV sector is getting impacted in the European market because of this development that Chinese market is doing in the EV sector. So what's happening is this. And second part, the company, let's talk about the KPIT again. So company have four division, if I can bifurcate that. First is US, second is Europe, third I would say third is combined China and India, fourth is Japan. So let me just tell you the brief of all the geographies. First, US. So in the US, commercial passenger vehicle. So companies overall in the passenger vehicle, what's happening is that just to diversify their portfolio, companies also going for commercial vehicle. Means they are also developing software for commercial vehicle plus of highways vehicles, like for example equipments and all, bulldozers, cranes and all, those kind of thing. Also in the recent time, last I would say last 2-3 years, companies also increasing their portfolio there. So that's the thing. And the companies basically uh, de-risking their overall segment by diversifying into commercial vehicle, and the second is of highway vehicles. But the commercial vehicle growth was around 8% in US market. Second is the sorry passenger vehicle grew at 8% in this quarter, year on year basis, and other things like commercial vehicle and the off highways is not showed a little bit degrowth, because it's a new thing for the company is developing their structure to grow this segment, and it has a lot of potential according to companies basically like KPIT basically like saying in the con call, basically in next 3-4 quarters this segment will grow a lot, and grow with a healthier rate, and it will also basically if I also basically diversify their portfolio in different things. That's the US market, and they are saying that H2 will be good for them, and they are seeing the uncertainty in the US market will settle down in next 1 or 2 quarters. That's the thing. And second thing that I want to mention here in the US market, in the US market, there are policies called like subsidies that the EVs is getting has been basically expired by the government. So EVs won't get any extra subsidies going forward from the government. That's the thing there. So that's like there is a bit uncertainty in there, like in that segment, but. Company is positive on the US segment just because of their different products that they have developed in last 2-3 years, commercial vehicle and all. And one more thing, they have also acquired a company with around $110 million to increase their like commercial vehicle and off highway vehicle segment in US market. That's US market. So just to summarize that, in US market they are seeing that in next 2-3 quarters, in next 1 or 2 quarters, they'll have growth both in, let's say, like overall passenger vehicle, and next 2-3 quarters they'll have a good growth in the let's say this commercial vehicle and off highway vehicle segment. That's US. Now let's go to Europe. In Europe, what's happening? A company is like in Europe. Europe basically grew -5%, so it showed degrowth in the segment. Although US grew around 7-8%, but Europe degrowth by 5% because of the global uncertainty and the legacy player threatened by the China. But the thing is, what happened in Europe is that lot of legacy OEMs basically try to do some quick fix so that they can compete with China. So they are basically focusing on e-cockpit, and the second one is that autonomous second. They are mainly focusing on that so that they can just instantly compete with China, and therefore the overall growth in the powertrains basically the battery setup and all the fundamental structure of the EV. They are focusing on less on that. They are focusing on things that can be changed very quickly. So therefore the growth has been very muted in this European zone. But what is happening is that company is into ER&D, which is engineering and research and development. So the EVs there and the legacy players there have to increase their spending on overall R&D, because they have to compete with China, and they won't going to cut a lot of their budget in the R&D in the longer term. So company is basically saying that in the long term or in next 2-3 quarters, the growth will pick up in European market. That's what company is saying, and they are focusing on this segment because it consists of more than 35 to 40% of their total revenue in European market. So that's the thing. Let's see how this thing will unfold from for USA. Third, if we talk about the Japan, so Japan also showed degrowth because of the global uncertainty and all. and company have one like less client there, and company is basically saying um, little bit sluggishness will be expected for next 1 or 2 quarters, but after that it will start growing the Japan market, because they are talking to 2 3 big clients there. So let's see how it will unfold in Japan. And now let's talk about the China and India. So company is very bullish on China and India. Company also acquired one company in like Caresoft in China for the Chinese expansion, and they are seeing good growth in that segment. And they are basically told in the mention in the con call is that they are seeing 3 digit revenue number in next few years from this India and China. Currently, it's very less contribution from both of these countries. One more thing in the like initial traction they are getting in India. So JSW is basically entering into the uh, automobile industry, and they are launching their first car in July 2026. And what is happening, they have partnered with the KPIT for their software development, and also it's a good thing for the company. They are launching a new vehicle at all. It's a first all EV rated like automobile company in the Indian segment, and they are projecting, like JSW is projecting around 26,000 crore rupees in next 5 years. They will expand on this automobile sector. So that's the thing. It's a good win for the company. The company is saying in next 3 4 quarters, the revenue from this like they haven't specified a lot, but they're saying that 2 3 quarters after they are started seeing the like basically the revenue coming from this deal. So that's the thing, the overall. And fourth fifth thing I would say, the company has developed a technology on sodium ion batteries. So basically currently all the batteries are lithium ion batteries, but company developed India's first sodium ion batteries, and company give that whole contract to another company to develop the batteries, and they will get the royalties on that. So company is saying that in next 2 3 years they'll start expecting the revenue from that also. So what I think about the company is that company has a mode. In it is the sector is very lucrative right now. Currently, the ER&D sector is around $3 billion, and is expected to be at around 450 to 550, which is like a growth of like 10 to 11% in next 5 years. So we have to see that. And the automobile research industry is at around $50 billion, which is around 50 around 20% of the whole ER&D. So that's the thing we have to look on. And it's a very growing sector. Like you can see, Chinese market is disrupting the thing, and we have to develop our automobiles very quickly. So that's the thing. I think that this Chinese thing is basically increasing the pace of the development in Europe. I think that's a good thing for the KPIT. But let's see how it will unfold. And basically, companies saying next quarter, this quarter would be so basically Q2 would be little bit flattish to growth, but it will be better than the previous one. And company saying that H2 will be good for the company. So let's see how it will unfold, and it's a very good market to be in. Overall, very good market. And I mean, if we talk about the KPIT competitors, so we have Tata Elxsi and Tata Technology. They are also into the like 50%, 51% of the Tata Elxsi revenue comes from the automobile. They are also into same like case and STV segment. But the thing is, the overall, if we talk about the market, the Tata thing is little bit fluctuating a lot. Like is fluctuating a lot in terms of revenue and profit, because of their Jaguar and Land Rover thing. They have to, because biggest client is Jaguar, Land Rover, and they are facing slowdowns. That's why their profits are very fluctuating in the current nature, but their PE is on the higher side because they have different segment also, and KPIT is into automobile altogether. So anything anything very negative in the automobile sector will directly impact the revenue of the KPIT technology. That's the thing. So let's see how it will unfold. Basically, I'm predicting that the uh, next 1 year the stock can go up by around, let's see, uh, by around 20-25%. I'm seeing the upside in this. So yeah, I have to calculate all of those things. Just I'm estimating that. Let's see.